Asian stocks were mostly trading up on Wednesday after a volatile session for U.S. equities and as yields on Treasury bonds retreated from a 7-year peak. Japanese shares edged higher at the close, ending a 4-day run of losses, with purchases making up for the higher yen's dampening impact. Markets remain cautious amid volatility in the United States. All the Asian markets headed higher, with the Hang Seng picking up 0.3% to close at 26,262. Shanghai Composite Index gained 0.2% to 2,725, while the Nikkei Index was 0.2% higher at 23,506 points. The Dow and S&P 500 ended down slightly on Tuesday as investors worried about global growth prospects sold materials and industrial stocks, but falling bond yields kept declines in check. Another earnings results season is on the way and it kicks off on Friday, which will give direction for the end of the year. The Dow Jones Industrial fell 0.2% to 26,430, while the S&P 500 lost 0.1% to 2,880. And the Nasdaq Composite Index was marginally up to close out the day at 7,738 points. For more on the markets, we cross to Arabile Gumede. He's standing by at the JSE. Arabile, good afternoon. How's the market reacting to that announcement of our new finance minister?
Well, there was a large amount of positivity, of course, from the market yesterday. Even the rand going up towards 14 rand and 54 cents odd. It has pulled back slightly now to hover around that 14 rand 60 mark, but it is still positive, having breached around 15 rand at some stage as well. So it is really, really significant that the market is approving, of course, holding its breath though with South Africa's fundamentals, because those are the things that essentially do need to change. But it's an absolute bloodbath on the JSE today, more than 1.5% down for the all share, and red across the board. Of course, the big proponent there would be Naspers, which is down nearly 4% as well. But we'll unpack exactly what's moving all those elements in just a bit. Let's take a look for now at how the local and European markets are faring. Well, as you can see, the market there pretty much in red across most territories, even in Europe as well. So we'll unpack all of that now with Michael Treherne, Portfolio Manager at Vestact Asset Management. Michael, thank you so much. An absolute bloodbath. Let's unpack this. What is going on today?
Yeah, it just looks like a general risk-off day. That I don't think it's a South African story. I just think it's a global story. Yesterday we saw a US 10-year Treasury bond have its best yield in 7 years, and what that means is that bonds, or debt so to speak, is giving a higher yield, which means that people move away from stocks and into debt because they then get those interest payments. And it's just as a switch for one asset class to the other. And unfortunately, stocks are on the receiving end of a hiding at the moment.
It seems like it's been a hiding for a long time, though. It's not just now. It's pretty much been this year, and it's pretty much been for a couple of years now, where we've seen a bit of a flat, if not negative, response for the all share.
Yeah, I mean, the alt share hasn't had really a positive year since 2014. It's been basically flat. Last year, the alt share was up 17%, but that was because Naspers basically doubled.
Yeah.
If you remove the Naspers out of it, just Naspers, it's flat. So the market as a whole has done nothing since 2014, and that's reflective of the very lackluster GDP growth in South Africa and potentially all the corruption coming through now through the hearings. You've seen it in our economic growth, and you're seeing it in our stock performances, and that translates into people's pension funds. So corruption having a toll on the people.
Yeah, the fundamentals there of the South African economy are still going to be coming through in all the numbers, even when we head through to MTBPS as well later this month. 2,742 rand a share for Naspers, down 3.5% now. That's still massive.
Yeah, I mean, especially if you consider coming into 2018, Naspers is above 4,000 rand a share. Everyone's feeling happy and jovial. Now 2,700, just dropping quickly. The Naspers share price is very correlated to the Tencent share price in Hong Kong, because Naspers owns a third of the business. And Tencent is down 2.5% today, and it's now down 3.5% locally. Was down close to 5% earlier today, and I just think it's a negative reaction all around. There's been a lot of stories coming out today about how this is the biggest drop in the Tencent share price since it's listed. So from its peak at the beginning of the year, Tencent has lost over $200 billion. So that's dollars, $200 billion gone from its market cap, and it's been down. It's now down over 38%, close to 40% just this year, and that's translated into Naspers and just general selling in our market.
But still, value for money in terms of a business. I mean, there's some estimates that it should be well over 4,000 rand a share. At this price, it probably makes it a good buy at some stage.
Yeah, look, we've been saying that Naspers is probably a good buy. Anything under 3,500, potentially even under 4,000 rand a share.
Sure.
By buying Naspers, you have access to the biggest internet company in China, and that's a company you want to own for the long run. And yes, it's got a few hiccups. If you have look at the charts of Tencent since it's listed in early 2000s, it's had drawbacks at 37%, drawbacks at 33%, drawbacks at 27% and 28%. You know, pullbacks are normal for the market. This sort of thing happens. But what we're seeing is, with the pullback now, is a lot of clients of ours, at least, are correlating it to Steinhoff. And the assumption is Steinhoff went close to zero. If something else is struggling, will it be another Steinhoff? And our general message is that Steinhoff is abnormal. It's not normal for a company to go to zero. And you need to emphasize that it was the fraud at Steinhoff that's brought it down, and it wasn't general market movements.
Look at that. We finally have a green blip there on the market. That's 1.43 up for Aspen. Let's head on over to that currency. 14.62 Rand, even improving to around 14.50 Rand or so. It was a good look when we found, of course, that the finance minister now was going to be Tito Mboweni, but it doesn't seem to be carrying momentum through to pushing the rand well towards 14 Rand and even below.
Yeah, so it's a bit of a dual story. I mean, if you have a look at our currency compared to other major trading or other major currencies, being the pound and the euro, you can see that it's as much as the Tito Mboweni strength coming through, it's also just general dollar weakness coming through. The currency was strengthening before it was even announced yesterday that Tito Mboweni would be the next finance minister, and that just points to dollar driving things as usual. And the reason that we're at 14.60 is because dollars look really strong. The yields that we spoke about earlier, people are flowing out of emerging markets and into developed markets, and in particular into the US, to take advantage of those higher yields. It's a safe economy, and people are saying we want those returns, so we're going to be buying dollars so that we can have access to it. And if it's a strong dollar, it means the weak rand.
Sure. It's going to be quite interesting towards the end of this month how that fares as well. Let's quickly just unwrap that commodity space. Oil becomes the big question mark there. Now just a little bit below $85 a barrel, but it seems to be stuck now above 80.
Yeah, it's a supply and demand issue here. You got Iranian oil that's potentially US sanctions going to be fully implemented in November. All of a sudden, you've got 2 million barrels of oil that are no longer in the global oil market, and that's roughly 2%. And when you've got a very, very balanced supply and demand metric, you take 2% out, you mean the price has to go up quite significantly. US frackers can't bring enough oil to market because of supply constraints. There's just not enough trucks in the US, not enough pipelines to get the oil from inland to the ports. So you've got supply constraints, and demand coming from China and India is just massive and keeps growing, and that's where it's at. And we've now got political tension between Turkey and Saudi Arabia, and that could potentially hurt oil prices even more if those countries get a bit more frosty with each other.
Certainly interesting market picture. Down 1.42% is where the JSE sits at present. So some fears there as we head back towards 50,000 points now, sitting at around 54,000 points odd. That's where the market looks like, or that's what it looks like for now, and that's where the buck stops this afternoon. Keep track of that rand as well, 14.62 Rand odd against the US dollar. Mpumelelo Nzinga joining you right after this. Do stay tuned.